channel, guys. So today we are going to be doing a recap on how gold went through the whole week, and without wasting any time, let's jump into it, guys. So on Monday we started with the resistance that was from the previous week, right here, resistance right there, which was from the previous week on Thursday. On Friday it was broken, and we ended the week when there is a break of that resistance, and we came in on Monday and we had a double top right here, which went right to the resistance, and it created a support, and this support was holding till it broke and made a move back to the supply zone right there. So every week that starts, you have to first look for where the supply is and where the demand is. So doing that, you have to go to the 4-hour time frame right here, and then you look for a move that went to the downside or a move that went to the upside. In the 4-hour time frame, you look for a big move to the downside, and you see where that move started, like a big red candle. So where that big red candle is, we have this one right here and this one. So these two will somewhere here where they start is the supply zone. So we'll draw a rectangle right here to determine that this is our supply zone. And then this move went straight up to here. This is the last move that was created to the upside, the last big move. So this green candle right here and this one are the two supplies, the demand zones. So this one and this one are the two supply zones. So after determining where the supply and resistance is at the current market structure when the week is beginning, so you label that properly on your chart and you wait for the price to go back to that zone, and you see how it reacts. If it breaks the supply zone, then you know it's going to be a buy. If it breaks the demand zone, it's going to be a sell. But if it rejects on that zone, then expect a move back to the upside if it rejects on the demand zone. And if it rejects on the supply, like right all these points, expect a move to the downside. So let's go back to the 30 minutes chart right here. So Monday started here with a support that went straight to the supply zone, and we saw our first rejection here. These three candles are just indicating a good rejection on the zone. So it created an opportunity for a downward move that was created right here, and we saw a move at least of 50 pips to the downside after the rejection, and then it created a support above these two resistance, this here and here. It created a support above resistance that indicated a continuation again to the upside. And then we saw on Tuesday a move back to the supply zone right here. So you saw a good rejection on the supply zone, so this indicated an opportunity back to the downside, and then it came back into the zone and rejected, showing a clear indication of a downward move that's about to come. And then we saw a move at least of 50 pips again to the downside. As you can see right there, we saw a move to the downside in a trend-like form, back to the downside for another 50 pips again. Then we saw a move, so it means this was creating a range above these resistances. So this looked like it was going to break to the upside, but remember, there is always a lot of market manipulation on gold. So here we saw a good support right there, a good indicator that is going to move to the upside. Right there is the 30-minute candle that is creating a good demand right there, a good support here. So this support created a move again that went into the zone. Now here there was an opportunity after the rejection, but then there was a liquidity sweep. So most likely this will always happen on gold after something like two moves to the supply zone. All this liquidity that will be created, 2 or 3 moves that go to the supply or demand zone, after a lot of liquidity is created, there will always be a liquidity sweep. So if you see moves that are going to the supply or the demand zone multiple times, expect a liquidity sweep very soon. So here was the liquidity sweep of all this liquidity that was being created right there. And after this liquidity sweep, you saw a big rejection on this supply zone, showing that this supply is still holding very, very strong. So after the liquidity sweep, we saw a very big move to the downside. This move went for around 100 pips after the rejection, and this was on Wednesday. So it broke the small supports that were in here between the week. It broke the support and it cleared the upward liquidity, buy side liquidity. It cleared the sell side liquidity, and they came here and cleared the buy side liquidity. Then it went back up into the fair value gap on Thursday, made a rejection right there during the news, and it just broke like a bloodbath right there and went for a very, very good 20 pips, $20 on the downside. So that's 200 pips, and this was within the news. So now we saw the first move down to the demand zone, because this is our 4-hour demand zone from the start of the week right there. This was our 4-hour demand zone here and here. So this was the first move that touched the 4-hour demand zone, and we saw a good rejection straight away from here, the news. And then it took around 30 minutes to create that it took around 2 hours to create that rejection, and it started going back up. So we had a support that was being created around there. There was a rejection on that level of 1912, and on Friday that rejection was resistance was broken, retested, and it was holding strong right there. But we were waiting for a break of this support to see if the move goes upward. But there was some news also on Friday that broke to the upside, and we saw a big move back to the demand zone right there. Now there was a new resistance that was created on Wednesday, so the price moved back to that resistance and rejected exactly at the same price point, 1935 or 34.9. So that rejection again created was in the zone, the 4-hour supply. It came back right down into our move for the whole week, which was between 1902 and 1930. It came back in after the rejection. Now what are we hoping or waiting for to see in the following week? We still have the same supply zone at 1930, and we still have the same demand zone at 1902. So these two zones are still holding, the supply zone and the demand zone. So anytime you see a move into the supply zone and you see a rejection, just go for the shorts. And anytime you see a move to the demand zone and it creates a good rejection on the demand zone, you just go for the buy until these two zones are broken. Then if this zone is broken, you can go for any buys above here if you see a rejection to the AA support that is being created on the upside above 1930. But you see resistance that is being created below 1902 after it is broken, then in that case we'll go for the shorts below this zone. But you have to take notice that below 1902 there is another demand zone around 1896. So what I'm trying to say here is, if you see a break, if you see the break above this zone and it creates a support above that zone, we'll go for the longs up to 1940. And if you see a break below this zone, there is another demand zone right here. So you might expect another move from this zone to that for another 4-hour demand zone, and then it goes back up. Again, you might see a break through all these two zones, and if it makes a resistance right here on 1896, you will see a big move to the downside. So that's what we are expecting in the following week. We are waiting for a break of 1930 to the upside or a break of 1896 to the downside to go for the more, to go on the bearish side more. Okay guys, thank you for watching. Keep it up, keep it up. If you have any questions, you can put them in the comment section. We'll be answering any if they are. Thank you guys.